The U.S. is moving early. They're building a reserve base of gold and Bitcoin before the next global shift hits full speed, because whoever controls the new settlement layer wins the next era of money. And now, look at what assets they're choosing, right? It's not stocks, it's not bonds, it's not real estate, it's gold, it's Bitcoin. The only two assets that sit outside the credit system, as of this year, is officially being treated the same way by institutions. BlackRock iShares Bitcoin ETF filing describes Bitcoin as, quote, a reserve-grade digital asset.
When a simple tax bill hides a global power move, you know the financial system is shifting, and according to Mark Moss, that shift could quietly be steering the world toward Bitcoin.
Covertly acquire Bitcoin for the strategic Bitcoin reserve. Now, here's where the new playbook, it starts to look very familiar, but this time with a 21st century twist. Now, in March of 2025, the White House signed an executive order to establish what they called a, quote, strategic crypto reserve. Now, it was reported to multiple outlets at the time, including Investopedia, Al Jazeera, and it specifically mentioned that it would be seeded with Bitcoin already in government custody. The same Bitcoin seized over the years from Silk Road and other cases. Then a few months later, in July of 25, Treasury Secretary Scott Bessent gave a speech at the White House titled, quote, Building the Golden Age of Crypto. Now, those were his words, not my words. He said that the goal was to align the next generation of monetary assets with American values of openness and innovation. And around the same time, Larry Fink, the CEO of BlackRock, said in a national interview, quote, there's a role for crypto the same way there's a role for gold, end quote. Now, put those dots together, right? The U.S. holds around 195,000 Bitcoin already through forfeitures. That's worth billions at current prices. If they decided to start buying quietly, even a few $100 million a month, nobody would even see it. It would look exactly like normal market flow. So if the gold gets remarked at the market price and the Treasury suddenly has $1 trillion in its new headroom in its general account, what better way to hedge that new liquidity than by converting part of it into the hardest digital asset on earth? Now, that's what the strategic Bitcoin reserve really is. It's a hedge against their own balance sheet expansion. Let hard assets run turbo. Now, once the balance sheet's been reset, once the strategic reserves are in place, there's really only one step left. You ease the policy, right? You let inflation run hot and you allow the assets that you just bought, gold, Bitcoin, and commodities, to reprice the system for you. That's exactly what's happening right now. After the October 29th rate cut, we saw gold hold above about $4,000. Bitcoin sitting close to near its all-time highs. Now, analysts over at Goldman Sachs, Bank of America, they've both raised their targets of gold of $4,500, maybe even $5,000 by next year. And as the dollar weakens and liquidity floods back in, we should see this run turbo. All right, run turbo, it's not just a theory. It's a description of what happens when you let the market do the repricing for you. Now, historically, that's how every debt-based system resets, through inflation and asset revaluation, not through austerity. Okay, so to recap, step 4, gold run. Step 5, remarket to market. Flush the Treasury's account with roughly $1 trillion in value. Step 6 was use that to quietly accumulate Bitcoin and other strategic assets. And then step 7 was once the books are clean, drop the rates and let the markets run. Let the markets reprice them. Okay, that's the playbook. And when you zoom out, it all makes perfect sense. The system isn't being saved. The system's being reset. And the ones who understand how the pieces connect are the ones who are going to come out ahead on the other side of this. Okay, so now you see the pattern, right? The tariffs, the tax levers, the gold revaluation, the Bitcoin reserve, right? It's all part of the same move. And the goal isn't to destroy the system, it's to rebuild it, but this time on a stronger base of hard assets. But the question that you should be asking is, who gets in position first? Who has the first mover advantage here? Treasury Secretary Scott Bessent said it plainly earlier this year. The United States needs to secure first mover advantage in this new financial system, end quote. That wasn't some kind of offhand comment, right? That was a policy directive he was telling us. When the executive order for the strategic crypto reserve was signed back in March of 2025, it made the U.S. the first government in the world to officially recognize Bitcoin as a strategic monetary asset. That same language, first mover advantage, showed up again in the Treasury documents a few months later. And this is not just talk, right? The IMF's October 2025 Financial Stability Review said the same thing, that dollar-backed digital assets and tokenized treasuries could extend U.S. monetary dominance into the digital age, provided the U.S. acts first. So the U.S. is moving early. They're building a reserve base of gold and Bitcoin before the next global shift hits full speed, because whoever controls the new settlement layer wins the next era of money. And now, look at what assets they're choosing, right? It's not stocks, it's not bonds, it's not real estate. It's gold, it's Bitcoin. The only two assets that sit outside the credit system.
When a simple tax bill hides a global power move, you know the financial system is shifting, and according to Mark Moss, that shift could quietly be steering the world toward Bitcoin. Mark Moss, a renowned investor and financial analyst, highlights a subtle but powerful shift in U.S. monetary strategy that could reshape the global financial order and Bitcoin's role within it. What began as a seemingly routine tax bill introducing a 5% excise tax on remittances may, in Moss's view, mark the start of a deliberate plan to monetize the dollar's payment network. Rather than simply defending the dollar's dominance, the U.S. appears ready to charge rent for using it, effectively turning its financial system into a profit engine. Moss calls this the Great Squeeze, suggesting it's less about protectionism and more about restructuring the global flow of capital. While BRICS nations are cutting the dollar out of trade and developing blockchain-based settlement systems backed by their own currencies, the U.S. seems to be countering by reinforcing its digital financial infrastructure. Moss argues that this approach is part of a deeper 7-step strategy, one that begins with gold repatriation and ultimately culminates in Bitcoin. From his analysis, Bitcoin stands to benefit as both BRICS and the U.S. shift toward hard, decentralized assets to anchor the next era of money. For investors, understanding this quiet race for monetary control may prove critical before the next global reset takes full form. Let's get back to the interview.
It all starts with what looks like a boring tax bill, the kind that nobody really pays attention to, but hidden inside was a new 5% excise tax on remittances. Now, that's the money that basically people use to send abroad, right, to family members every single day. Now, the House Ways and Means Committee spelled it out very clearly. They said, quote, impose a 5% excise tax on remittance transfers collected by remittance providers. So in plain English, that means that anyone wiring dollars out of the U.S. now pays a toll. They also floated something called Section 899. Now, this is a retaliatory tax designed to punish countries that target U.S. companies with digital or unfair taxes. Now, it didn't make it into the final version. The G7 pushed back on that. But the point wasn't whether it passed or not. The threat alone sent a very clear message, basically saying America's willing to tax global money flows to protect its financial dominance. So on the surface, this looks like a trade policy. Maybe it looks like a corporate taxation. But if you dig just one layer deeper, you start to see something much bigger forming underneath it. And while all this is going on, the BRICS countries, that's Brazil, Russia, India, China, South Africa, they've been quietly cutting the dollar out of trade. China and Russia, they now settle most of their bilateral trade in yuan or rubles. Brazil and China, they use yuan and they used real for settlements. India, they've been buying Russian oil and rupees. What they're really doing is they're monetizing their supply chains. All right, think about that. Monetizing their supply chains. And they do this by using their own currencies to trade the real goods that they create, like energy and commodities. Now, that's a problem for the US because America doesn't have commodities. America doesn't really export as much stuff like the BRICS countries do anymore. So it can't monetize supply chains in the same way. Instead, the US is monetizing something different. The US is monetizing its payment chains. All right. These are the financial pipes that the world still relies on to move money around the world. Now, they can do this by taxing remittances, digital transactions, and even threatening penalties on foreign dollar holders. Now, the U.S. is turning the dollar system into a profit center itself. That's what I call the great squeeze. Now, it's not about defending the dollar. It's about charging rent to use it. To use the dollar payment network. A 5% toll on money leaving the U.S., a new tax threat on countries holding U.S. debt, a higher beat tax on multinationals shifting profits abroad. Piece by piece, the U.S. is tightening the flow of capital, forcing dollars to stay home, and making foreign users pay for the privilege of using the U.S. dollar. And of course, that's just what we can see, right? That's the smoke. Because behind the public plan is a second. It's a far more strategic move that almost nobody's talking about yet. It's a plan that starts with gold, but it ends with Bitcoin. And it could change the global financial system overnight. Okay, so that's the public plan, all right? That's the part they let us see. But behind it, there's another layer, a deeper layer. It's a 7-step sequence that looks a lot less like random policy and a lot more like strategy. All right, so let's start by walking through this step by step. So step number 1 is we want to scare gold onshore via tariff threats. Now, back in April 2025, the White House announced what they called a universal baseline tariff. It was 10% on every import into the United States. Now, they justified it as a trade reset, but what it really did was it reintroduced uncertainty across every supply chain. Now, when this happens, capital, commodities, they start to retreat back inside their fortress. All right, now we've seen this movie before. In 1933, President Roosevelt issued Executive Order 6102. He forced all private citizens to turn in their gold to the government. All right, that was followed by the Gold Reserve Act of 1934, which revalued gold from $20 an ounce to $35 an ounce, effectively devaluing the dollar overnight. Now, I'm not saying that's happening again, but the pattern is basically the same. When a country starts reshaping the trade regime and the debt system at the same time, it tightens control over its monetary base, and that starts with gold. Even America's allies have done it recently. Between 2013 and 2017, Germany's Bundesbank quietly repatriated about 600 tons of gold from New York and Paris back over to Frankfurt. They did that to ensure accessibility in a crisis. That's what they said, right? That's what they said. That's not what I'm saying. So yes, tariffs and gold don't sound connected at first, but history tells us a different story. When a government starts changing the rules, gold always comes home first.
The U.S. appears to be quietly positioning Bitcoin as a core component of its long-term monetary strategy, signaling a profound shift in how national reserves are structured. By systematically building a reserve of up to 4 million BTC over the next 15 years, the strategy integrates Bitcoin into a broader framework alongside gold, creating a hedge against inflation and balance sheet expansion. Investors should view this as part of a deliberate effort to anchor the financial system with hard, decentralized assets, reducing reliance on traditional fiat mechanisms. With global competitors like BRICS exploring alternative blockchain-based settlement systems, Bitcoin's strategic significance is only set to increase, making it a central asset in the evolution of digital monetary sovereignty. Do you think Bitcoin will become a core national reserve asset alongside gold in the next decade? As Bitcoin increasingly becomes a cornerstone of global financial strategy, its role in shaping the future of money is undeniable. Share your thoughts in the comments below, and don't forget to like, share, and subscribe for more in-depth financial insights.